Great and beautiful morning and evening to you all, wherever you are joining me at this hour. Welcome to 305th edition of Investdata Trading Academy Live with Ambrose. Yes, I say welcome to another brand new month. Yes, the month of August, the eighth month of the year, and we're seeing the market across the globe still mixed. Even as looking down to the market, we're seeing that our market is still experiencing the sell sentiment that has dominated the market in the last five trading sessions. As a lot of profit taking and also possible reshuffling on the strength of the numbers that we have seen so far. But if we look at the global scene, the flashish nature and the mixed market continue. I will tell you that for the month of July just ended yesterday, most of the matured market pulled back, just like we saw yesterday in our own market, as a lot of what expected policy managers of different domain and hoods on that just came, shows that most of the matured countries or economy were seeing a contraction in their purchasing power purchasing index, or we call the MPI, the purchasing PMI, which is the purchasing manager, was seeing contraction in some of them. Some of them are still below the 50 basic point. And when you know that in using that data, once you see a company that is posting figure that's below 50, it shows a sign of what contraction. Even when also come up above it, that's why I say the economy is expanding. From what we're seeing now, I can tell you that looking at the the market opening in Europe and Asia as we speak right away, I can see that we are seeing the market being put back as investor weigh in this latest purchasing manager index or factory activities. We are seeing that some of these data that just came from this environment are as not too attractive, showing that the marine sector is still struggling in this environment. We can see the impact of prolonged oil price, and at the same time what is going on in Ukraine is not helping some of the economy, even when you see data that came from the second largest economy in terms of their operating margin. You can see that it's already we're saying that the factory activities are are going down, are not really going as expected, increasing risk of investing in those economy and also the global economy at large. I'll speak now. I see that the factory data that came from activity that came from Germany and that of China, I will tell you they are not looking too attractive. These zones are still down. As far as are still looking to see what is going to come out from US in terms of today we want to see the labor deployment data, and then time see also the purchasing manager for that domain. Yes, we have seen that Q2 number that came from from Europe and also from US are not looking bad. Good. This mixed macroeconomic data are also influencing activities of investors, and in the midst of or at the peak of earnings season, as we speak now, what is happening, the expectation of earnings in this domain has increased, especially this week, and that's also going to shape the market. But the pullback we just saw for the month of October nearly across the market, across the globe, as a result of what this continued volatility and also adjustment for what profit taking, which also pass a part of the market at any given time. For me, it just shows that the second half of the year is starting on a good note, despite we saw poor profit taking or a mixed trend or increased volatility in the first month of the second half. But we're entering the second month in the quarter and then down in the second half of the year. I believe that activities was going to shape if the trend was seen. Like today now, we have seen that Reserve Bank of Australia have also left the rate or change, and that also put pressure on their currency because the lift rate or change. You can see if after seeing the 5 basis points, we're also seeing a signal of when you see rate cut or on change, it tells you that either you are trying to stop going down, start the adjusting down, or you want to watch, like what they say there, they want to see what is happening in their own economy and global economy at large before they can see that if another country has also taken that step in the living rate on change in their today's MPC meeting over there, it tells you that these are the trends we're likely to see in this second half. And I believe that what is happening in the economy is going to kind of determine what each domain will be doing. We have seen that. Don't forget that in China, we have seen that they still cut rate by 10 basis points, while also in Japan is still having a negative interest rate, while some West African country, Western world are still adjusting to 95 basis points. some West Africa country or Africa country was also seeing some adjustment, despite also seeing that even inflation in Africa also is also looking cool. Despite that, or looking southward, despite that in Nigeria the reverse is case, we are seeing inflation going higher. Put to expect that the month of July we going to see a higher figure, but because of what the prices that have increased in terms of subsidy removal and other and cost of living also. These are the things that we expect that will also influence our inflation here. But I will tell you that from what we're seeing in global sense, this also will tell us that from the move, the global economy is also saying that rising interest rate has not done well to the global economy. Yes, they have seen some improvement, which also have made the World Bank, I said yesterday, to review, kind of a growth for the global economy and different sub-regions and all those stuff. But I believe that as more data, comes out, it will give investor, a clue where they are going, and that will be a good thing that will guide us as investors to know what to do. Losses that, for me, that we're seeing at this time is as a result of these manufacturing activities that contracted, as I've said earlier in the month of July. That means we might see a reversal when we just see more earnings. That I tell you, this week we expect to see more earnings in the matured market. That will also change the trend depending on the strength of these earnings. You can see earlier numbers we have seen, but lately we are seeing a mixed number. That's why also, like what we saw here in Nigeria, we are seeing a mixed number. Also, we are seeing some in some domain that same trend is also going on. But from the from the Asia factory, like I've said earlier, and that of Germany and also Russia, China, you can see how they are also affecting this zone market, this different zone market activities as we speak now. But the good thing is that the oil price has slowed down on profit-taking activities, and also that the price period was as a result of tightening, and output that have impacted price. But I feel that because oil are rallying for almost 4 months, I think the fear of profit taking, and also that is what put the price just marginally, but we see that it's still very strong. Oil trade at almost $85 now. For me, it's a good one for, like I said in this last time, oil product, but as to speak, it's a good one. But this is also a sign that if we continue like this, inflation that while saying that is slowing down, that is easing, might also change direction. That's why all eyes on looking at what is happening around the comments, that it will form vision of Fed and European Central Bank in their nearest futures meeting, whether they will continue their monetary policy tightening, or this also what we're looking at, kind of losing losing interest rate. That content will be a boost for stock market, across the globe. Which I believe that that will also be a plus for us. Anytime, despite what we're seeing that we saw rate hike in physical market, that also as we're seeing fund flowing away from equity market, because I tell you, secular flow from is triggered by this interest rate, because when we saw this jack up in Treasury bill, that also a form movement. But either you want to start seeing interest rate, because you want to drive the economy, you need to put interest there. But because of the inflation we're having, all these are what we are thinking that CBN at the meeting are putting in place. Yes, you can see that they are stylishly kind of removing the limit and different corridor limitation for the market banks and the microfinance banks, so that they can do no cash limit. No, all of them are being removed now, so that people can have access to funds to drive the economy, because we need liquidity to drive the economy. Even with the pronunciation of or the address of the president yesterday, you can see some sectors where we know so we kind of intervention, palliative here and there. But for me, we might not have the immediate impact immediately, but as we go into the quarter, like I said, before the end of the quarter, start seeing things in that also inform where we are looking. But one thing is very sure, that you as a trader investor, as you are looking at numbers that are coming, both the macroeconomic data and also corporate earnings, you need to know where you should position your portfolio now. Even when we start seeing improvement, from the economy, you are already in this. But those sectors that have been that are resident at this point, and also still have potential to produce a higher number, or any powers are still very strong, you need to align your portfolio in that regard, in that direction, so that you're able to work to stay ahead of the market. It's very, very important. Very, very important. The number that came to, like I said, this number, the number that came from DHL group also, that number was not too good. There was a decline in their turnover, and that also affected the price of the stock, because of the quarterly number was not bad as a result of what high inflation, and all these are what that's happening in Ukraine is not helping matter at all. because cost of energy, all these are weighing on what on consumers and also flight rates, and these are also have affected them. This I believe that more earnings that will come from different domains will determine whether dividends will come at the end of the day. But I tell you, there's some company that still in turmoil because of what what is happening and also policy in their domain. These are the things that we also will look at when we are taking decision as investors. It's very, very key that we note all this so that at the end of the day, we're able to make what informed investment decision. And finally, look at what is happening in US. Like I said, there's a mismarket. US market, as speak now, no, I see that the key indices there are also looking southward, and that's as a result of what investors are trying to weigh the result we're expecting today, this week, and today being Tuesday, and also and these are big names we expect to split off from Starbucks and also Caterpillar and all those. These are many strong names, but their result is what we're looking at, and also at the same time that the Facebook, the owners of Meta platform, also are also trying to launch a new platform also to launch or add a new artificial intelligence into his chat box, so that at the time these are what is going on. Like I see that artificial intelligence is what every tech company is trying to go, so that human being will do less of some activities, so that this will make life easier. But at the same time, we have to also keep up, because if we see more that will also create also some job problems, because if artificial intelligence is also taking, we need to put all these things also at perspective when we are looking at all this at at the end of the day. These are what is happening right now. Dan Jones, S&P and Nasdaq are slightly in red. They all pull back, as to speak at this hour, showing that all eyes at this number, and also like I told you, the pullback for the end of the month for the July, we are seeing to see how it's going to start in a new month of August. But I told you earlier that the volatility of the earnings reaction and also macroeconomic data has kept the market in this mood. But for me, there's no cause for alarm. We are not in it alone. You can see the matured market in the same trend we are having. But only here that we have seen almost straight 5 days profit taking, which I'm not even surprised seeing it, because market have rallied, that created value. Now they are about to be profit taking. As market pull back, we see more strength for when about to look at a strong resistance level that where it thought that down. We'll come to the chart and we'll explore that again on our Nigeria market. And as I tell you, this is a busy earnings week for matured market, and that also will shape the market there. I know that also determine what will happen. Like as we are also looking at the data, any that are hit the market so far, and we are rebalancing our portfolio down here, and this trend also will continue on, for a while until another information, especially here in Nigeria that we are seeing, the list of ministers are more coming. Want to see portfolio. This all help to give direction, to also help the government plan very well and implement their programs that will also drive the economy. I've mentioned oil price flew down. I believe that this is what is happening in the market, and I can see that all the markets are nearly flat and some are missed in terms of performance, which the Nigerian market is not left aside. Those also in the African market, the same mixed trend we are seeing. Look at what is happening in Johannesburg, also in Egypt. The same trend we are seeing also in this market. Yes, back to our market right away. But before we go to the market, results that came, they are much, but we'll talk them one by one in this platform and also the larger. But this morning we are seeing that fixing has also kind of release a notification for what for entry dividend of 55 kobo, which is good, and the payment day will be around September. For me, it's a good news. That of we are aware of the MTN entry dividend. We're still expecting that more that are result like Mansard and Chi and others to release their own the entry dividend corporate action. For the banks that are going to pay dividend, they've already sent their, some of them have sent their results, others are soon send. When it comes, we also know what they are doing at the end of the day. But before we go to looking at the earnings we're going to discuss today, today we're looking at only just one. We're looking at the FCMB. But before that, we want to look at how the market performed in the month of July, and that is very, very important. And how are we expecting the month of August to look like? These are the things we want to do now. Then we can take the. That's why I say we're not doing more on earnings, but we want to look at how the market has performed so far and how we're going to position and the trend in the market. How has August been in the previous year? I will tell you that August is a very dicey month, especially towards this period. Now, but because of the change we have seen, that the month of May have witnessed that of June and July, I might see August, because I see very dicey month, to be a month of profit taking and mistrend before investors start positioning ahead again for Q3 in October. That means the early month of September might see a dull market. It depends on the government policy and activities, but on the strength of the earnings we have seen so far, like I've said before now, these earnings are really below market expectation. Yes, there are some companies that have, that perform excellently. We have seen surprising earnings from some company. But I'll tell you, majority of these numbers are mixed and some of them are flat. But the ones that have really turned the market is the big names in the manufacturing sector that have turned red overnight. That also what is kind of dampening investors, kind of sentiment, and also seeing a little hike in rate that also make the fixed income market attractive. But for us that are equity players, there's no cause for alarm at all. All you do at this time is to relieve your portfolio because the trend is still very an uptrend. Yeah, that's why we're seeing a correction or kind of a markdown phase we're seeing. It's for a while. No others, positive sentiment or news or a trigger will come to the market. That means you need to realign your portfolio to where you see that the company has a strong earnings power that will support where they are going in terms of performance. This just have clear results we have seen for those that have the same first quarter, for those that has the March year end. We're looking forward to see the Q3, and we still have the first month of July have started. We have seen no changes in the policy, and who believe that the government have seen the part of the policy and they are taking move to make sure that this is addressed so that it will not be a thing that will continue. And that's why I said for those companies who have seen a negative FS report that affected their world, it will be a one thing on or off. And even those that also have reported the gain will also be a plus for them, but it also be a one thing off. But I believe that going to the future, all this will be addressed so that at the end of the day, you and I will not be panicking. In the month of July, like I said, we saw the market recording almost 5.52% for just a month. And year to date, market has recorded about 25.53. So I see the market have touched almost 29, 28 point something before pulling back as a result of profit taking. It says that this market is still in an uptrend. But when we come to the chart, it will give us a clear direction. We saw looking at the sectoral performance, we saw that the oil and gas dominated with almost a 20.05 gain for just 1 month, followed by industrial goods. Industrial is wondering because of the movement in Dangote sugar and that of Bua. Now we have not seen much movement in WAPCO, but these two move a lot because of the buyback. You can see. Then we also seen that the banking sector has moved up because of profit taking of rate, about a 3 point something percent. But the good thing is that it's only the consumer goods and insurance that we have seen posting a negative performance for the month of that review. And as a result of purely as a result of what? As a result of profit taking. And it becomes very interesting for those insurance company sector that we have seen a pullback because of profit taking. The number that emanated from that sector are becoming very attractive. It gives investors that are then an insight to what you should be doing right away now. Now we have seen there are factors that are that are responsible for these numbers we are seeing in insurance company, and that factor I still remain there. Not going to change. For me, I think that is where to look at this pullback we have seen in the index, give you an insight to what to do. For the bank, we saw yes, it was a good performance. Yes, despite that the Porsche index has performed the banking index for this period, for this month under review. The banking the index had about just recorded just minimum around the 3 point. It's not a bad one for me. This is about 3.84% for the period, and it's good. And because they are not negative, you can see that most of the banks are even rally. That some of them are still very strong. Even that market is adjusting. That you can see GTB has remained even above 35, even with the correction we're seeing. Zenith Bank, almost above 32. We're seeing the stability, Stanbic BTC, and for that we're seeing the bank. But we know that this result have come so far. There are some industries and sectors that have really performed well in terms of number that give us insight. We saw the result that came from the banking sector, insurance as mentioned earlier. We saw the number that came from other service sectors, especially the air handling companies. We saw good numbers coming from them. And also don't forget that in the oil sector, despite we are seeing a mixed number there, we saw a flat number from Total, but number that came from Miss Oil and Konoye, and tell that these numbers are standing. The one from also for Ghana, we see that a number that was also not in line with market expectation. But I believe that the positive sentiment in that sector is still very, very strong. So it will guide you to know what to do. looking at this number, this are Q2 number, you can easily just forecast what's likely to come at the end of the day. At the price they're selling, what is the P/E ratio of this company? Are they relatively slow? Are they really undervalued? When you look at all this for the banks, I'll tell you most of the banks are grossly undervalued, even at this price. That's why I said the bank has strong upside potential. And if this number continue, despite that this is one of them, I'll tell you the bank has other factors that will impact their number. And that possibility of banks growing their dividend in this current year is high because we have seen improved performance, and that also boosts the confidence and also so that the banks are also solid. Even as some are making plans to do what to come and raise a fresh fund, either through public offer or right issue. I tell you, it's just for the bank to solidify their position to do a bigger business. That's why they are going into holding companies. We need also bigger money to do other business so that those business that be subsidiary will also be contributing well to the bottom line of the company. We saw how Stanbic IBTC performance turn around after we have seen 2001, 2021, 2022 slow down. We have seen 2023 performance has also changed. I believe that if that trend is sustained in Stanbic IBTC, that will also support. When you have subsidiary, it has the way of impacting also your bottom line at the end of the day. You must all have this at the back of your mind so that you know where you should be looking at as we speak now. For me, the market is not doing badly. Yes, market is correcting, but I'll tell you, don't panic. Only that if you are in profit in some stock, take your profit right now. So that when it pull back, you can now buy more. And also, if you want to sell down in some position, either what attracted you are not there again, sell down and put your money and wait to enter when the market wants to. Because as we speak now, we're seeing market correcting, pulling back. You don't catch a foreign knife. I've used this severally in different places. As it's coming down, you wait the market to get to a good support level before you start jumping in. Or if you want to trade now, you know this is not time for the targeting to make 50%. You have made earlier in a week. The target number to make between 12 to 18%. You'll be selling, you'll be taking your profit. That is the way to go right away. This is not a time to be bleeding the market like that. But I believe that as the government unfold more policies and also the ministers come on board and put their own policies, and now start seeing the impact of government policy on the economy, on reality, on ground, that also change the psychology of the market and also the sentiment that will also follow the market. That's why I said it is not time for anybody to panic, but also invest wisely. Also, always trade your plan and also don't play with your stop loss. Your capital is key. I think what your capital is key, and you also have to protect your capital at any given time because if you are in the market and you are not trading because you are lost of capital, you only hear and see market is going up, you will be partaking. That's why your capital is key. You must put all strategy on ground to protect it. Yes, you might not have it 100%, but once you're able to know how to cut your loss at the right time, but like I said, if what attracted you, seeing that and see that money, you don't need to sell at a loss because all you are seeing is just paper loss. Also, if you are seeing paper gain, take your gain. Now, you are paying paper loss, don't panic for paper loss until you sell, it becomes a real loss. You need to have this also so that you won't be panicking that, oh, the market I've entered at high price, it's coming down. If you're able to cut the loss, fine, and come and buy it lower and buy more, fine. But if you're unable to cut the loss, or you do that, you have a fresh fund to inject to bring what to average down your cost. That's also another good strategy. You average down your cost in a company that you know that there is prospect and there is potential for them also to rebound. You don't average down, tie down money in a situation or in a stock that you see the prospect is shaking. No, you don't do that. The stock that you know that does a temporary thing, not a major that put it down, you can now average down. But for me, I average down mostly in a few occasions. I don't average down for any case. I must know what I'm averaging down, what I'm waiting, and how my long period I want to do, and also the kind of form you're using to average down. You don't need the money that you want to use to pay to average down or to pay your house rent. No, money that you don't need so that you can wait when it come back, you include your profit and also come out. That is how to trade in this kind of market that already was seeing a correction, a pullback, or a bearish sentiment. These are them who are also need to be made clear. Yes, as we come to the chart now, before we click on the chart, let's look at what the market is doing right away. Because of our time, the time is too small these days. Before you know it's up again. Let's look at what the market is doing live now. Before we click on the chart, I want us to look at the chart, in different time frames to really get exactly what is happening there. That will help us, to get to where we are going earlier or faster. Yet, as speaking, the market is still trading above 64,000 mark, but possibly that market can go below it today. But we'll look at the chart and see where the market is going. 64,014.49. Market is down by 323.03. Market is down by 0.48. That is almost 0.5 as we speak now. And we're having a negative market breadth. We're having a 20 losers as we speak now. Why we're having just 12 gainers in the market. That's why I say it's a bearish or a negative market breadth. As we speak now, if you look at the top losers, let's start from that top losers right away. Where the top losers were seen John Holt. No, these are the stocks that lead the month under review of this profit taking for a stock that recorded almost 80 to 70%, in the month under review. They are bound to profit taking. I can see this morning, John Holt is among the stock leading the pack 10% down, and followed by Sovereign Trust Insurance. You can see Cheap PLC there. Omatech result for me is not that, is not a result. And also we're seeing also Fidelity profit taking on Fidelity trading around the 785 right away now. The stock is pulling down already. We can see market because of profit taking. Also, if you look at the gainer chart, we can see that Abebe building is also leading there, followed by Tolerance. You can see Mansard. I'm not surprised. Mansard is still sustaining the momentum to the result over the weekend. We can also see Lasako result also passing, and passing the leakage assurance. Like I told you that this is where you should be looking at insurance company as you see the pullback in the month of July rate of profit taking, and numbers that come from that industry confirm otherwise that there is potential for this company to do well. For me, this is how to invest. You need to start looking at them right away. If you look at the activity chart, or what we call in terms of volume, we are seeing Master leading with almost 30.1 million share traded so far at 4 naira, 4 naira 6 kobo. Then we are seeing Japan following by 13.4 million share traded so far. Access Corp has pulled back below 7 naira to trade at 1630, 12.48 million share traded so far. UBA is doing 1385 at 11.12, 11.2 million share traded so far, and the last one there is FBN Holding 17.95, 10.9 million share traded so far. This is the state of the market. Quickly, we are coming to the chart. It's very, very important we look at the chart first. Yes, before I look at the chart, I want to quickly call up my T lines. They are very, very important. These indicators help us to look at this market easily and also to understand where the market is heading. It's good to have it so that it will guide you to know exactly what you are doing. The money flow is very very important. You use your MACD or use ADS, and also look at our moving average exponential. I tell you as usual, here we use what? We use our T line. Our T line is what? 8 days moving average exponential. It's best for us to capture our top and what and bottom. Now we are seeing that, looking at the chart this morning on a daily chart, you can see the market has confirmed a decline phase, also what we call a magnum phase. You can see that it has broken the T line down yesterday. This morning is extending it. That is why I tell you, when you see this kind of trend, the market is down and momentum is weak. But the good thing that we are seeing that at this hour, which is also, so we can see that the loss has started slowing down compared to what we saw yesterday, and we can see money flow looking up at this point on a 1 hour chart. It's a sign that fund is also coming back. Like backing hunters, I know before we see 3 days, 6 to 5 days, backing hunters start taking advantage of the market. Especially as we're seeing number, I tell you that these are investors. They don't just jump into market and they take time to analyze the number. And once they are coming to the project portfolio, you see some stock going up, and fund will come back to the market. Especially as all eyes are still on July inflation. No matter what we have seen rally, in those fixed income market, once inflation come again and their returns still remain red, it's also where can you against inflation is easier and faster in some equities, not all in what on the exchange. And I believe that for me, there's no cause for alarm. I say, stay patient. Once you are in a store that you know that what I started, you are still very, very tired. You don't need to panic as to speak. Yes, the MACD is still telling us that market become bearish. Look at MACD indicator on a daily chart. Quick one, I want to look at what is happening on a monthly chart. It's very, very important that we look at that. Monthly chart is the one I want to look at, so that now that the month has ended, we're having a new month. Look at the month. For the month, market is still above the T line, very, very strong. You can see it. This is a monthly chart, very strong one. You can see that your MACD here can see your MACD here. You can see MACD here. Very strong. You can see it here. You can see so far the volume very strong. You can see for what I'm telling you now. For on a monthly way, the market is still very strong, but that also very caution. We have seen a sign here for the month here. You can see it here. The month sign already this morning for this month that just started. You can see that market have gone up for pullback, and you see this kind of candlestick and uptrend. It's a sign of weakness. But let's see what expected policy that will come will do. These are the things we are looking at. This is a good one. I must show you this chart to see where the market is on the monthly chart, so that you won't be panicking at all, knowing where the market is going or where the market is coming from. You can see it here. They quickly look at the market on the weekly chart also. So to conclude all this, go to daily chart. See, this is your monthly chart. Your monthly chart, you can see that monthly is already also, sorry, your weekly chart is also above the T line. You can see, but we already see sign of profit taking. You can see it here on the red one. You can see how what it formed here. This candlestick before this red one is a sign of what? Indecision. You can see it here. It went up, it came down. Say that the sellers push down what the buyers. That's why when your buyers put them down, that's why you see the trend here and this week. That was what happened the previous week when the market just gained 0.02. You can see that there that sellers are dominating. And if you look at your chart, your MACD here, MACD is also almost confirming to this. Yes, we are seeing gradually that the histogram here is coming down. If I look at this trending down, sign of weakness. For this for monthly and weekly, the chart there's no cause for alarm. Like I say, if you look at the daily chart, that is where you can confirm that the market has broken down the T line. And this is short time frame that tells you what. And that's why if you are doing a daily trading, you also go ahead to look at what 1 hour chart to give us more information for today. What is happening in the market as we speak? Like I can say that the market is trading above the what below the T line. You can see for the last one how many hours. For this one, you can see that it has been below the T line. Even as market open today, below the T line, and money flow has come as well as almost zero for on the day on the 1 hour chart. But MACD is still also very bearish right away on the 1 hour chart. And that's why I said we don't need to panic. Let's just wait, because the market is already on a downtrend, on what I call a strong pullback. And this 15-minute chart, you can see also how the market is now. But on a 15-minute chart, that's why I say it's good to look at different time. You can see on the 15-minute chart what MACD is forming. MACD is also trying to become bullish here. You can see that it's accelerating here, and the money flow is also looking to 5. Now, once you see it crossing up here, we believe that as from next week, and from the middle of the week, today is Tuesday, and from middle of the week, tomorrow, Thursday, might still slow down because of bargain hunting, and also we're spread by before the end of the second week of August. We expect to see the money flow, investors coming back to reposition their portfolio, and if we see also all the policy statement of the president start seeing implementation, that will also boost confidence, and we need that also to support the market also. And if the effect becomes stable, the supply is also a boost for the market, because I tell you, the fear of losses people saw or seeing the result is part of what is kind of dampening investors confident also in the market. Don't forget that earnings is a major fundamental of the market. That's why equity market is different from other investors. Despite all of us look at the listing fundamental, but when you see a company where you are and the numbers are not looking good, it shows that you have direct effect on the prices, and that's why we are seeing some panic in the market. But I tell you that you that are investment knowledge, you don't need to panic with others in the market. You don't need to panic with them at all. Yes, let's look at this one today before we call it a day. Mansard chart and see how far to go. Let's look at Mansard chart. I've seen the market. Go to Mansard chart to look at the performance of Mansard. Mansard on a 15-minute chart, you can see the activities in the last 15 minutes. You can see what has happened. Also, there's also some profit taking activities. You can see that here, there's also divergence here on the 15-minute chart. You have seen. For quick one, look at the 1 hour chart on Mansard. So what you can see also on the 1 hour chart, people are about to take up. Either enter the stock at 340 kobo at 405, 410. Profit taking is expected. I'm not surprised. After seeing 2 days, 10%. I told you that this time, this kind of market again, once you made between 12 to 15%, you are good to go in this market. and that I'm seeing in Mansard now. On one watch out, you can see that money flow have given us sign that profit taking activity is already there. But why MACD is still very, very strong for the stock. Now let's go back to see a day chart of MACD of Mansard. Sorry, you can see that Mansard has crossed to above. You can see the gap up here to speak there at almost 4 naira 5 kobo or 8 kobo. You can see money flow reading almost 79. Good one. And MACD is already crossing, who's a bullish one. But let's see, but we're seeing selling activities, profit taking already in the stock. For me, I'm not worried at all because there's still more strong fundamental. These are entry dividend paying company. We look forward to see. Can still be surprised that facing have done this morning, rewarding investor in that capacity of entry dividend. Let's look forward to see more of them in this market. On this note, I'll say thank you and see you tomorrow. Enjoy the rest of your trading day. Bye.